You're still watching the Eastern Business Report right here on the Afia Business Morning. On Tuesday, the Nigerian Senate approved a fresh loan request of over $29 billion for the 2025 to 2026 period, a mix of foreign and domestic borrowing. This comes at a time when our total debt stands at staggering $97.24 billion, with 13.43 trillion Naira already budgeted this year just to service debt. What does this mean for the economy, for everyday Nigerians, and for business owners in the Southeast? Will this money build anything useful, or are we digging a deeper hole? Joining me now to talk about this is Anitche Ndudim Roland, financial analyst and CEO, Rugon Capital Limited. You're welcome on the program.
Thank you, Marvellous.
Good to see you again.
Yeah.
So let's get straight into our discussion, right? The government has approved over 29 billion US dollars borrowing loan for 2025 to 2026. What does this level of borrowing mean on top of a 149 trillion naira debt stock that's already there? What does this mean for us as a country?
Okay. It's clear where the Senate passed it, and it's more or less like a fait accompli for the government to go ahead to access external lending to fund its budget. I saw the news, which was for 2025, 2026. That's just like 2 years, and it's frightening when I saw it. I reached out to one or two presses, and there were other publications that it's going to last more than 2 years. So more or less like I got some comfort. But then, if you will look at the budget for 2025, this current budget, the country is borrowing 13 trillion, which is about $8.5 for this year. $8.5. Maybe if we can get a data of it, maybe the studio can send a data of it. $8.5 billion. But meanwhile, the entire borrowing is 29. So you still have another excess of 24 billion. So does it mean that the remaining 24 billion balance will be used for next year? That's an issue. So I still think that too, the publication that is for 2 years might not really actually pan out that way. It might extend more than 2 years. Then two, we are adding more debt to the existing debt. That's the implication. And you and I, and because it's a sovereign debt, it's for a longer tenor. And most external loans with longer tenors have a moratorium period. When I say moratorium period, like a period of grace where you don't start paying, the repayment does not kick in immediately. So these loans are obtained this year, 2025. Maximum 7 years. That means the repayments will be in 2032. 7 years' time. Why I say this, I was privileged to be consulted to review Chinese loans the nation took by the 8th Assembly. So were loans taken from Jonathan administrations to Buhari's administration, and all of them had the same tenor, 30 years with 7 years moratorium. So you can imagine the loan taken by Jonathan's administration that ended 2015. 7 years down the line, the repayment has kicked in. So Buhari took us, also obtained a loan in 2018. 7 years down the line, we're in 2025, the repayment will kick in this year. So you could see that the repayment of these loans, we will start paying them in 7 years' time. If you add 7 years to your age and 7 years to my age, you can see that we will tend to inherit this debt, which you and I, our children and children's unborn, will have to pay back. That's the implication. But the question now is, how will the funds be utilized? Which actual sector will it be utilized? And I know they made a list, which was not even sent in the publication. List of projects to be done, rails, transmission lines. Thank God, the Eastern Corridor, from Port Harcourt to Maiduguri was captured. We'll say a good one, unlike the previous administration that embarked on rail projects in the country and nothing was visible here. So that's a good one. But the question now is, if you're going to, just like any person that wants to obtain a loan, you should be thinking, how do you intend paying back the loan? That's the big question. Apart from your existing business, do you have an alternative source of paying back the loan? Do you have any strategic plan outside your current source of livelihood to pay back this loan?
You have designated 30% of the IGR in the country to repay this loan yearly. Okay,
now, if you rational human beings, if you're taking a loan, your repayment should not take more than 30% of the loan, your revenue. Now, according to present budget 2025 running, our debt to our revenue is about 32%. So we've exceeded it. This present budget, the debt service is about I think 13 trillion. Why our revenue is about, is it 44 or so? I just hope the data can come up here. I don't know if you have it here. So we're already at 32%, so you're already at the threshold. And taking more loans will also have constraints on other sectors. So I'm not even surprised why I saw $757 billion, $1 billion Naira to be raised as a bond to offset pension and arrears. That's it's not really a healthy sign of a fiscal responsible government. We're talking about pensions that are paid to civil servants. You know, pension is all about your salary is being paid and is deducted as a form of savings. 7% of it is deducted from you. And the government also provides 7% so that those that have worked for 35 years can be paid. And so having outstandings on pension, it's not a pleasant sight.
Yeah, before we go into that, Mr. Roland, you know, people say borrowing is not a bad thing, like you have stated earlier, as long as you can repay and also generate revenue from it. But at what point does borrowing become dangerous?
It becomes dangerous when you exceed 50% threshold of your debt to service, debt to your revenue. Because you don't have a latitude. Mind you, let's not forget, you're borrowing in another sovereign, you're borrowing in of a foreign currency, which you do not issue. You're borrowing in dollars, pounds, it's a sovereign country. So you must earn those foreign exchange. And your source of earning is through trade. Unlike if you're borrowing in Naira, the federal government, through the central bank, has prerogative to create the Naira. And so either you create it by printing or electronically. So for me, I prefer local borrowings. You can navigate your way around it very, very well. But with foreign denominated currencies, a sovereign, you are subject to global trade. You must earn it. And so you need to earn as much dollars as possible so that you can be able to service it. Now, even for the loans to be taken in Japanese yen and euros, and Japanese yen and euros, most of them will be paid back in dollars. Most of them. Because Nigeria does not have 15 billion Japanese yen in its books. 15 billion Japanese yen, if you do the conversion rate, is about, I think, $4 or $5 billion. So that's what is at stake right now. And so it behoves on us now to, like, okay, outside our source of revenue from crude oil and other sales, which impact on our foreign revenues, do we have any other strategic plan outside our FX reserves to pay this loan if things go bad? That's the question. Now, I have been saying on this forum that Nigeria needs to increase its gold reserves with the central bank. Presently, we have 21.5 tons of gold in our central bank reserves. And if you look at the trend, the price of gold has been inching up very fast. As of last year, the price of an ounce of gold was $2,000. Today is about $3,001 or $3,400 an ounce. 1 ton of gold is equivalent to 32,000 ounces of gold. So you can imagine from 2,000 to 3,004, you have a margin of 1,400. So if you multiply $1,400 times 32,000 ounces of gold times how many tons, you could say the country will be gaining tremendously. The country will be gaining tremendously to be able to take care of its debt service. So that's the beauty. But I was surprised the central bank, in their report of 2024, came out openly, accepted the impact of the price of gold on its balance sheet. It improves the size of its robustness and the profitability. But they went ahead and said they will continue in aggressive building of reserves as against gold accumulation, which they said gold is not easily convertible. Sorry, that's a big mistake. That is not true. And that is a wrong statement. The superpowers of this world have huge volumes of gold reserves. Right from America, which has 8,000 tons, 8,135 tons. The next is, you have Germany, China, UK, France, all of them. Because gold is money. It's the oldest form of money, number one. Now, the Bank of International Settlement, it's a global institution that regulates central banks across the globe, came out as of 2019 and said gold is no longer a tier 3 asset, but a tier 1 asset. What it means is that gold is now physical money. It can be treated as money. And so this is a strategic plan we should be thinking of. It's okay, in case everything fails, our gold reserves can salvage the country. So it's not a question of taking loans. The question we should be asking is, okay, what is our exit strategy as a nation to pay these loans? Because the price of gold will continue to rise. With the global alignments, geopolitics, the price of gold will continue to rise. The projection is to close at $4,000 this year. And it's a solution and a remedy to address global debt. Not just Nigeria alone, UK, across the G7 countries, they've all overshot themselves in loans. They've all been borrowing, and they all have a plan to exit these loans by revaluing the price of gold way above $15,000 to $20,000 an ounce.
Thank you so much for that insight, Mr. Roland. You know, the reason why people, or it seems Nigerians, are complaining that the government is borrowing is because it looks like we don't see what they do with this money they borrow. Now, past borrowing didn't translate into, or didn't always, let me say didn't always translate into physical growth. Do you anticipate that this would be different?
Okay. Yes, we've been borrowed. Let me not really say all the borrowings. I want to be fair to the government, because clearly the second Niger bridge was done by Sukuk bond. It's clear it was borrowed. The Enugu on the Express route, some sections of it was done by Sukuk bonds, and apart from the MTN arrangement. So we could see then the railways between Port Harcourt and Mbah was also done by Chinese loans. So let's not, yes, in being fair to the government, we can say there are some that you can see what actually it was used for. Now the question is, most of these loans should be tied to a project and not just free cash. Out of these loans, the government stated some areas.
Yeah.
And so that's what we want to see, okay, it is tied towards it. There's minimal risk of diversion because that's a flaw of every loan. There's a high risk of diversion of it. So, but if it's programmed and tailored towards a major project, we will see it. With the right contractors or service providers to provide that service, we will actually see it. But in terms of the returns, it has a time lag. It has a time lag. The question now is, would that loan generate enough revenue to pay the loans? That's the bigger question. So, but then the whole thing is, the whole aim is to increase productivity. I want to see more of the loans in our transmission lines so that we will not continue to be stuck with just 5,000 megawatts our transmission lines can carry. We should be talking transmission lines of 30 to 40,000 megawatts so that nobody uses generator. No economy can be competitive on generator. No. So the power will be constant. Manufacturing will depend on power and not just diesel. I want to see rails connecting the southeast to the north, southwest to the north, every part of the country, so that we can put an end to trucking of petroleum products. It is an abnormality. Even if you want to truck petroleum products, it will be maybe straight from the depots, which we all have. So let us revive critical sectors, especially our energy, and so that where these funds, these loans will be deployed, we will make headway as a people.
Thank you so much, Mr. Roland. If Nigeria continues to borrow, before we let you go, if Nigeria continues to borrow at similar volumes year after year, where does that lead? Who eventually bears the cost?
You and I, more especially we're of younger ages. The political class right now, basically 50, 60, the president is in his 70s, and we as well want to leave. But then, at their old age, they're no longer active. So you and I will now have to bear the risk, not the responsibility of paying it. Now, it will get to a stage where we all need to tighten our belts, because at a level 50, 60% and above, when I say 60%, let's say for every 1,000, for every 100 naira, you're servicing with 30 naira. If for every 100 naira, you're now servicing with 50 naira, you just have 50 naira for yourself. That 50 naira, you have so many needs. And if care is not taken, there'll be trade-offs. So that's why you will see incomplete projects, non-payment of pensions and gratuity. It will pop up. It will get to a stage. It chokes the entire country. And we pray we don't get to a war stage where we will sacrifice part of our sovereignty to our creditors. It has happened. If you recall the Greek debt default, bondholders in Greece had to build the country. When I say bondholders, people's pension funds that were invested in bonds. Currently, pension assets is about 16 trillion. A lot of it was invested in our bonds. So you and I, or those civil pensioners, bondholders, might be asked to build a country. When I say that is, we all take a haircut in our investment. If you invested $20,000 in bond, 20,000 naira in Nigerian bond, you might be asked to receive $10,000. That's the worst case. Same also for pension holders, they will take a haircut. So that's the danger. And so we pray we don't get to that stage. That's why an alarm or a warning needs to be sounded. Hey, bond credit is good, but it could get to a stage it becomes a big burden and a problem.
Thank you so much, Mr. Roland, for joining us
Thank you
on the
very
program today. Our time is fast spent. Would have loved to hear more from you. Thank you for joining us.
Thank you.
And that's all we can take on the Eastern Business Report. Till I see you tomorrow at 10 a.m. on Monday for another edition of the Afia Business Morning. I am Marvellous Apuamaga, saying, have a lovely day. And of course, up next is Afia. Thank you for watching.